You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, welcome back, everybody. Episode 151.
151.
Yep. How you doing?
Yeah, I'm doing okay. I've got a sore back at the moment.
Yeah, you got killed by this second jab. What's going on, dude?
So I think we said off the podcast, we both got our second jab this week. You didn't have any too bad side effects afterwards.
Well, so far. How long do they say? Because I got mine yesterday at 1 o'clock and it's currently the next day at 11 o'clock. So I feel like I would have had, I've got a sore arm, but you get a jab in your arm and of course it's going to be a little bit sore. But no, I don't feel too bad in terms of flu or anything like that. But you just got whacked out of nowhere.
Yeah, I got mine, it must have been Monday afternoon. And then that night I was just completely wiped out. I felt like I had the flu. It was shocking. And then the weird part has been it's a few days later now and I've got really bad back pain. So I think hopefully it goes away over the next couple of days. Because I want to go and play golf again.
That's the real question, Hamish. Have you been able to go and play golf yet?
No, I haven't. And it's ever since the jab, this is my sad story. Ever since getting my second jab, I haven't played golf. It's been 3 days. What am I supposed to do? Work? Ridiculous.
Yeah. Young white guy in Melbourne complains that he's not able to play golf. I can just see the headlines.
Yeah. It's like the sad part of the news. I'm obviously fine. I'm obviously half joking, but yeah, hopefully it clears up over the next couple of days, or maybe I'll go get it checked out if not. But I mean, I think it's still a pretty common side effect. I think I looked it up. It was 1% of people, which 1% is not that much, but it's still fairly common to have some back pain after it. So we'll see what happens.
Interesting. Well, hopefully you start feeling a little bit better.
Yeah.
In that case, I won't talk about how fantastic I feel after my second jab. I think I won't rub it in.
Yeah. There is some good news this week, actually. Though. Victoria is out of lockdown tomorrow. So,
wow!
Hooray for Victoria!
Yay!
Proud of us.
What's your double vax percentage? Do you know?
Just crossed 70% today. So yeah, right. That's that was kind of the milestone that we were looking for to come out of lockdown. So yeah, that's good. It's good news. I think ACT, you guys have basically got 100% single vax.
Almost. That's quite remarkable, isn't it?
It is.
I'm not sure on the double dose stats, but yeah, single dose. We're actually, we're crushing it. I don't know. Well done us, I guess.
Yeah, I wonder. I guess there's just not that many people there, so it's kind of a smaller sample size. But I wonder if we'll see that across other states. I would imagine that we would probably see both eventually in the mid 90s for most states. I would imagine.
I hope so.
That was my expectation. I couldn't imagine more than 5% of people not getting it. So yeah,
it makes sense. Yeah, well, hopefully we're kind of seeing the light at the end of the tunnel, I guess, when it comes to this COVID stuff.
Hopefully.
But, hopefully. Now, today on the podcast, we have it's kind of a weird a week in news. We've got a lot of things to talk about, but they're all kind of short, sharp things. So we've got a couple of course, earnings time. So we've got Tesla earnings, Netflix earnings. Then we've got a couple of shorter stories, one about Alibaba, Evergrande's back in the news, PayPal's popping up, Facebook as well. So we'll see how we go. We'll try and get through all these different news stories because they all I think we should discuss them. But
they're all like little updates. There's not really any kind of major breaking news, I think, except for the earnings, which is a little bit to talk about. But besides that, these are kind of little updates about some of the things we've spoken about over the past few weeks, and then some couple of new things as well.
So we'll try and get through that, and then hopefully we can get into some Q&A as well. So we'll try and chuck in a few at the end. We'll see how we go. So let's get started, eh?
Today's episode is sponsored by ShareSite, which is an application you can use to track the performance of your stock portfolio. So basically, you can bring in all of your trades either manually or automatically by importing them through an Excel spreadsheet. So you can just download them from your broker, or you can just connect your broker if it's one of the associated brokers, which is most brokers at this point. And once you do that, it will allow you to track all of the different types of gains. So capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you, which is a lifesaver. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So ShareSite generates up to 12 different reports that can be used to track the performance of your portfolio, as well as used to work out things such as capital gains, dividend income, and more. And at the moment, you can try ShareSite for free by heading over to sharesite.com/younginvestors. That's site spelled SIGHT, sharesite.com/younginvestors. Use that link, sign up to a free plan, track up to 10 holdings forever, or you can also use that link to get 4 months off a premium yearly subscription if you want to sign up to more features. And thanks to everyone who has used that link when signing up and is supporting the podcast. Thank you very much.
Yeah, absolutely. Absolutely. All right, tell me about Netflix. What's going on with Netflix?
Yeah.
Last quarter they had, if I recall correctly, they did not impress with the number of subscribers they added.
No.
So what's been going on? Is it a better story this time around?
Yeah. So the story last quarter, I'm just trying to remember back. So last quarter, they only had 1.5 million subscriber ads, which was obviously very disappointing, but also kind of to be expected because we were, starting to do these comparisons to the best months or the best quarters from last year where the lockdown was kind of taking place and everyone was like, what am I supposed to do? I don't have anything to do. So I'm going to download Netflix and watch Netflix all day. So that was kind of a tough comparison to last year. You would have had some people maybe canceling those subscriptions as we come out of lockdown. So you had a bit of a headwind in that way. But this quarter, things picked up actually unexpectedly as well.
Right.
So this quarter was expected to kind of be a bit more of a flow-on effect of comparisons to last year, but there was the performance of some good TV shows and some movies that actually helped their quarter do quite well. Well, not as well as previous quarters, but a lot better than they expected. So revenue for the company came in at $7.5 billion for the quarter. This is Q3, which was up 16.3% year over year. So, not as big of an increase as some of their previous quarters. I'm just trying to have a look back at their growth in previous quarters. So, that's the slowest growth in the past 5 quarters. So, they are still slowing down substantially. But $7.5 billion in revenue. Net income, so their profitability came in at $1.8 billion, which was up 23.5%. And again, it was the second slowest growth in the past 5 months, but pretty much in line with growth of the last few quarters. Last quarter was 25%, then 27, then 14, and then 20. So, pretty decent growth coming out of the business. Of course, the biggest driver of revenue growth is going to be the number of subscribers that they add. So its revenue growth is really going to come from subscriber ads and the price of those subscriptions. It's pretty two-dimensional business on the revenue front. So in terms of subscriber ads, total subscribers reached 213.56 million global subscribers, which is, they're getting up there. That's a
lot of people.
That is a lot of people. They're still the leader, I believe, in streaming subscribers, I would imagine.
Oh, definitely. Definitely.
Netflix, not Netflix. Disney Plus is getting relatively close, I think, right? They're in the mid hundreds, am I?
Yeah. Subscription numbers. Where are we? 107. So here we go. Direct to consumer business performing well. Total of nearly 174 million subscriptions across Disney Plus, ESPN Plus, and Hulu. That
Right,
was
so, yeah.
August.
Okay, so if you're including all of the umbrella of their subscription services, 170. Wow, so they actually are, gaining quite quickly on them. But Netflix is still way out in front. In terms of additions for the quarter, so just new subscribers, that came in at 4.38 million, which was up 9.4% year over year. So again, still, tough comparison to last year. Of course. So the year over year growth looks tough, but 4.38 million ads is a lot better than last quarter, which, as I said, was just 1.5 million. And if we're comparing that to, if I can read this table really quickly. So the third quarter of, the third quarter of last year, they only added 2.2 million.
Right.
Which is
was that the quarter where it was just like strangely down versus the quarters around it?
Yeah, I mean it looks really low. I mean the quarter after that was plus 8.5 million.
Yeah, that was strange.
And
they did have one quarter where I was just like, what? I remember that.
Yeah. So that's kind of the situation with the business. And so in terms of why they had, such a dramatic increase from the previous quarter, a lot of the credit is going towards the success of a new Korean TV series called, I'm sure everyone's aware, called Squid Game, which this TV series has been everywhere.
It has. You can't avoid it.
You can't avoid it. It's just blast. If you've been on social media at all for the past couple of weeks, or the past month, then you've seen at least snippets of this show. I mean, almost everyone I know has been coerced into watching it. At least, well, I should say coerced, but I mean, everyone kind of feels the pressure of, everyone's watched it and everyone says it's so good. So I have to watch it, but it's actually been the biggest Netflix show ever.
Wow.
Ever. Which is quite stunning, right? Because this is a show that's a foreign film. It's in Korean. So you have people either watching with English subtitles or you can watch the English dubbed version. But either way, it's a foreign film, which you would not imagine would be able to become the most successful Netflix show of all time in a world where the dominant language is English. Particularly for their subscribers.
And I'm thinking like that's even beating, was it Tiger King as well?
Yeah, I mean,
that was a Netflix show. And also like shows like Stranger Things. Like I remember when Stranger Things was just the talk of the town. That's a Netflix original. So
yeah, I think Bridgerton as well was one of their, I think they listed that a bit further down in their document as, they had 82 million accounts had watched that. So that's I think that's their number one for the first 28 days. So they measure this on the first 4 weeks as the show is released. So in the first 4 weeks, Bridgerton season 1 was number 1, which had 82 million accounts watch it.
Okay.
Squid Game in the first 4 weeks had 142 million accounts.
Wow.
Watch it. 142 million accounts. Out of how many accounts did we just say they had? 213.
So like most accounts, really.
Most accounts, 2/3,
that's
almost
insane.
2/3. Oh yeah,
and that absolutely blows Bridgerton out of the water. That is crazy.
It's almost double.
Yeah. But interestingly, this does tell me, I used to be a big believer in, when Disney Plus was coming down, it was walking into town for the first time. I was like, I think Disney Plus is really going to crush it because they've just got they've just got so much content. Like you think about the Disney umbrella and all their brands and whatnot. And I was always just saying, it's just so much content that they've already got. Surely people are going to want to watch all that content. But I mean, this kind of story does prove that, it's a very viable strategy for these streaming services is to just try and hit new viral shows. Like forget about, I mean, it's nice to have all the backups. Oh, people want to go watch the old Star Wars movies or something. But I mean, it does show you how important it is to be fresh with your content and actually hit the new content that people are really interested in. Because I remember one of the big drivers of Disney Plus subscriber growth when it came out was The Mandalorian, because that was at the time that was going viral and everyone was talking about it, Baby Yoda and blah, blah, blah.
Yeah.
And then once that show, once the season wrapped up, a lot of people were stopping their subscription to Disney Plus.
Yeah.
So it is. I guess this is just a bit of an eye opener that really a lot of the success of these streaming services is what original content they make next, I suppose.
Oh, absolutely. I mean, there's kind of two elements there. There's you want a massive catalog so that when you've run out of things to watch, you can find something new, right? There's something there. Or when you want to watch a classic that you just remember, oh, this is such a great film from 10 years ago or 20, let's call that a classic. But I mean, like for us, I mean, watching something that we watched as a kid maybe or something like that, right? Yeah. Knowing that it's there, that you'll be able to find it on a streaming service. That's really important. But then a huge element is, of course, new shows that are coming out. What's the hottest, latest show that everyone's going to be talking about? And Squid Game certainly fell into that category. And it was ranked, just a couple of other stats around it. These two stats are kind of mind-blowing. It ranked number one for Netflix. They have their ranking system when you log on and you can see the top 10 shows for what people are watching at the moment. It ranked number one in 94 different countries, including the US. Wow. So people were watching this in a lot of different languages. People were just wanting to consume this. And of course, as you mentioned, of streaming services looking for movies or TV series that might go viral or something like that, a big part of the success of Squid Game was because it went viral on TikTok. And they actually included the stats from Squid Game on TikTok in the press release. And they estimate that Squid Game related TikToks have amassed a total of 42 billion views on TikTok, which is just insane. Jeez. But then it makes sense, if something like that amasses so many views, 42 billion views, then it makes sense that it's going to gain some kind of traction and some kind of popularity. So, and it was a really good film, TV series as well. If you haven't seen it, I would highly recommend it. It's very gory, so if you're not into gory movies,
can't handle it,
TV shows, then maybe give it a pass. But it's a great film. So,
all right, I have to watch it.
Yeah, you'll have to watch it. Yeah, I can't believe you haven't actually. You would really enjoy it. I think you would really enjoy it. So,
I'm sure I would. I don't know. I go through phases where I'm into TV and then when I'm just not. I don't know. We'll see. I'll give it a go though. It sounds like it. It sounds like it'll be good. I mean, surely it has to be good. 142 million households watched it in 4 weeks.
Yeah.
There we go. Is there anything else to talk about with Netflix? Or is that just about it?
Yeah, that's just about it. The only other thing I wanted to mention is they're actually going to be changing how they report successful shows. So as we kind of alluded to throughout this, up until now, they kind of base it on how many accounts have watched the show. So 142 million household accounts watched Squid Game, for example. They're now going to be switching that to the total hours watched. And I think that makes a lot of sense because I was always wondering, well, what's the cutoff for how many people watched the show? Is it half of the series? Is it the whole series? And there will be variance in how much people watch of the series. Some people watch it all the way through. Some people watch one episode. So total hours watched, I think, makes a lot of sense. So that you can see how much time on Netflix people spent watching a show. That's a more raw, true view of how successful a show is on Netflix, I think, in my opinion at least. So that's how they're going to be doing that.
It's kind of like us on YouTube, how we can see, how many clicks we've got, but I don't know. Personally, I'm much more interested in how much watch time the video gets. If I get 1 million clicks on a video, but they're only watching for a minute, or I get 200,000 views on a video, but they're watching for 10 minutes, then I'd probably say that the second one is more successful overall. But it does definitely make sense in terms of a TV show where you actually want to gauge, you want to gauge how many people are actually watching it. How total hours watched as opposed to just who's kind of clicking on it. Yeah,
exactly right. You want to track that engagement in the show. And I mean, if it's just a movie, you could probably do it by views because most people don't. I mean, I guess people do kind of stop watching movies halfway through, but for the most part, it's kind of one view. Whereas a TV series, there's a big variance in how much people watch. You could watch one episode and you've technically watched the show, but you might hate it. And that's very different to watching 50 episodes of a show. So, I think it makes sense for them to make that switch. And I think they'll be doing that in the next quarter, I believe. They said later in the year, and we're at Q3. So I presume Q4, they're going to be showing us that. And I would presume that Squid Game's going to be at the top of that list as well. I don't believe they included that in this report. I believe they only included the number of households who watched it. But I'm sure we'll see that in the next quarter.
Yeah, that'd be interesting to see.
Yeah.
All right. Well, that was actually quite interesting, Netflix Q3. Should we talk about Tesla Q3?
Yes, a little bit? We should. Let's do it.
I'm not going to... Yeah. Normally I spend flipping forever on Tesla, but I don't think I will this time around. We already spoke about a lot of Tesla when we talked about first of all, the delivery numbers, which we've already talked about recently, and also the shareholder meeting. So there's just like numbers to add, I guess. We kind of are already up to speed on the context of a lot of what's going on there. So as we discussed recently, record Q3 deliveries of 241,000. Most of which were Model 3 and Model Y, only very few were S and X. So they had 13.7 billion in revenue total, most like 99 whatever percent coming from automotive. That's definitely where basically every single cent of their revenue comes from, which was up 57% year over year. So very impressive growth. Gross margin grew to 26.6%. Operating margin grew to 14.6%. And they set record net income of 1.6 billion. They set free cash flow of 1.3 billion. At the quarter end, they had $16.1 billion in cash. They actually retired some of their high interest 2025 debt, I think, in the quarter. Which, I'm fine with that. Like, I don't mind it at all when you see companies reducing their debt load.
Oh yeah.
But that's kind of just the core numbers out of Tesla. It was a pretty impressive quarter. I think you can argue.
Pretty impressive, 57% year over year growth.
Yeah, I think you can argue that when you look at the stock price, that maybe the numbers don't quite make sense in terms of what the stock or what the market cap is at the moment. But that obviously Tesla is one of those scenarios where there is so much going on and so much future growth potential and future revenue potential with their different projects that investors are definitely giving them the benefit of the doubt that, well, they're certainly expecting. They are expecting a lot of Tesla's future, which is kind of dangerous in a way because it means that if Tesla kind of stumbles and can't deliver, then that probably spells a little bit of trouble for the stock price. But anyway, in terms of operations, that's what I like to look at with Tesla. I mean, the numbers are great, and obviously you got to look at them. But for me, I just like looking at we know they've got long-term goals to do a few key things, and I'm just interested in how they're progressing in terms of their operations to be able to do those. So in terms of operations, they increased their solar deployed by 46% year over year. They increased their energy storage deployed by 71% year over year. So they're going quite well. They actually announced in Q3 as well that they're going to have a mega pack, which is their grid scale battery storage solution. They're going to have a mega pack factory being built over the next few years, which is pretty cool. In terms of their factories, Fremont factory continues to ramp up the S and the X deliveries, the new ones, the new S and Xs. Shanghai is now Tesla's main export hub instead of California. So they've made that switch, and now a lot, like all of the Australian cars coming from Shanghai. But I believe now even some of the standard range Model 3s that are built in Shanghai are being shipped to the United States, which is kind of crazy.
That's crazy. Does that mean that there should be a reduction in the pricing of Teslas in, like, say, Australia, for example?
Yeah, there has been. Yeah, so that's we've already seen that over the past year or so. I believe pretty much all the models have lost, $5,000 to $10,000 off their price each. I mean, I think the cheapest Tesla, which is the Model 3 Standard Range Plus, is was it under $60,000 now? I think it's $59,900.
Wow.
I think, $59,900. So yeah, they're doing very well. They're bringing the cost down for the end consumer, which is kind of interesting. When you look at these as an investor, you look at presentations, and if you see, average selling price is going up, then you're like, oh, great. But Tesla's one of those weird ones where they're actively trying to get their average selling price down. Which is just a quirk of their business, because they want their cars to be more affordable.
Yeah, well, I think it's obviously it sacrifices some short-term profitability, of course, to do that, but it can solidify more long-term profitability if you can gain a stronger customer base and attract more people to buy your products. I mean, that's basically Costco's entire business, is to every time they achieve any kind of efficiency, they just deliver it straight back to the customer in the form of lower prices. And it means that they make less on a gross margin basis than Walmart and some of its other competitors. But over the long term, they have more customers. Exactly right. Yeah.
Yeah, exact same strategy. They note that, their cars are still too expensive. The vast majority of people still can't buy one, just from an affordability standpoint. So they've got to access that, I guess, to increase their total addressable market in that sense, they have to get the price down. So that's a kind of interesting quirk of Tesla. Shanghai is now the main export hub, which is improving prices. Gigafactory Texas and Berlin are roughly at the same point. They're hoping to get production up and running by the end of the year, or initial production, and then the ramp up of production happens throughout next year. In terms of full self-driving, they continue to slowly roll out the full self-driving beta in the US. So we talked about that a week or two ago, I think. So they're just slowly but surely rolling that out. Pretty much Elon said, there's currently been no crashes with the full self-driving software, and it needs to stay that way. So they're just baby steps, releasing it slowly but surely, improving the software all the time. And then for the 4680 cells, this is something that investors are very interested in, because this is really what is restricting Tesla is they don't have enough battery cells to meet the demand for their products. So they're making their own battery cell, which is the 4680 cell, which has a range of different cost savings and efficiencies built into it. And they're looking to get that up and running for the new battery packs for the Model Ys and the Cybertrucks, etc. And there's Tesla semi truck and that sort of thing that they're going to start building in the next few years. But they didn't really say too much in their earnings release. There might have been more commentary on it in the earnings call, but I haven't got around to listening to it yet. They just say that we're on track with the testing, hopefully. So I guess it's just a wait and see on that front. But I really wish they provided more. For people that really understand Tesla, they realize that this 4680 cell is actually really, really, really important for the future of their business. And if they're talking about anything, they should be talking about full self-driving. They should be talking about the 4680 cells. So, I mean, they just kind of said that, 4680 is on track, but I wish they kind of went a little bit deeper and explained a little bit more on that. But hopefully it's not too long before they start producing those structural battery packs. Yeah.
And I mean, beyond that, it's also just another way that Tesla can be even more vertically integrated, that they can even take on even more of the responsibility of the end-to-end process for manufacturing and selling cars. So very interesting. There's always, you always talk about Tesla and make it seem like there's not too much going on, because you went through it quite quickly, but there's so much in there. I mean, they're opening a couple of gigafactories that are going to be opening up. They think they're making moves on making their own batteries. Full self-driving is rolling out. There's so many things going on.
Maybe it's just because I'm so in tune with it. Like I'm so up to date on everything that it seems like,
It's
but you're right.
Incredible.
If you zoom out,
it's
there's a lot going on.
It's crazy. It's crazy what's going on with Tesla. So is the stock price still just churning on? Is it nothing?
Yeah, it's back. I think it's back up in the 800s. Honestly, I haven't looked at it in a long time.
Wow, it's been on a bit of a run since May. Since May, it's up 50%.
Wow, it's probably at
almost at its all-time
52-week highs at 900. So, I mean, it's near all-time highs.
Yeah, it's close.
But I mean, you look at that market cap, $857 billion market cap, and you look at like the net income and like the free cash flow, you're just like, "Oy, yay."
Yeah, I mean, you could do it at a very, very basic level. You could think, well, can Tesla return to me if I pay $850 billion? Can they produce $850 billion in cash flow over the next decade? Let's say, can they return my capital to me over the next decade?
Yeah,
and I don't think they can do that.
It's hard,
but
difficult.
That's not everything that the stock price of a new business is about. It's baking in a lot more than I think the next 10 years of cash flow, for example. You're baking in a business becoming one of the largest, if not the largest automaker in the world. And automakers not all of them, most of them don't, but successful automakers, let's say, the very few who have lasted a lot longer than 10 years. So that's kind of baked into the price of Tesla at the moment. But
yeah, there's a lot of stuff baked in there. And there's so many question marks. It's like a lot of the reason the price is so high is because of full self-driving.
True.
Because I mean, if you are the only car manufacturer that has a full self-driving software, your cars can drive themselves, no driver needed, and you can create that robo-taxi network. There's so much potential money there, but it's still such a big question mark that it's just like, well, how far away is that? How much revenue does it bring to Tesla? So definitely investors are giving, like, it has the potential to be big, but at the moment where you see the business where really they just, at the moment, a lot of people get angry at me when I say this, but at the moment they just sell cars. I mean, that's really their business. They just make cars and they sell them, and then they make money from the sale. Yes, that's not what their business will be in the future, but that's pretty much, if you just looked at it right now, what their current operations are, that's how they make money. So when you look at it in that aspect, you look at the stock price and you're like, oh my gosh. But yeah, there's just so many potential big revenue sources in the future, but it's just a big question mark. So it makes it very difficult to kind of figure out, I guess. But, it's part of the game, I guess, trying to figure it all out.
Yeah, exactly right. All right, where should we?
That's enough for Tesla.
Where should we go from here? Should we just continue rolling in? I could talk a little bit about Jack Ma.
Oh yeah,
Jack Ma's he's been spotted in the wild.
Yeah, China's richest man missing, now found.
Yeah, so Jack Ma, who's literally become the real life version of Where's Wally, has been seen traveling to Spain last week.
That's a good one. So true.
It is kind of funny though. I mean, the reason why it's like that is probably not that funny, but I mean, every time he's spotted now is just it makes
he's still alive.
Yeah, he's still. He's still there. No, so this week he was spotted traveling to Spain. So the South China Morning Post, which is a newspaper owned by Alibaba, later also published an article reporting that Ma was in Spain for an agriculture and technology study tour related to environmental issues. So he does a lot of like philanthropy now, doesn't he? And I mean, I'm not sure. I don't really know too much about what
he's not even particularly like involved with Alibaba. Like he's not their CEO. I think people just think, oh, Jack Ma, he's the Alibaba CEO. No, he's not. He's the founder. I'm sure he has a very large stake in it still, but actually not. He never really had a massive stake because he sold a lot of his stake very early on. But anyway, that's a topic for a different day. But yeah, people are just like, Jack Ma, Alibaba. But not one that was the case, but it's not so much anymore, I guess.
Yeah, and it is interesting that it has it does have such an influence on the stock price, because the reason why everyone's kind of keeping an eye out for where Jack Ma is because of kind of what's happened over now 12 months. So I mean, in October of last year, he gave a speech that in part had some criticism for Chinese regulators and their potential for regulating Alibaba. And then shortly after that, Ma disappeared from the public view for months, and people were really worried that he was that no one had seen him. Then in January of 2021, he reappeared, and the stock price had a fairly violent reaction to both of those things. The stock performed poorly between October and January, and then spiked up, I think, 10% when he finally reappeared. Right. So clearly there's a significant amount of investors who care about this. And then he's been pretty quiet ever since then. I believe he hadn't made any other public appearances from January until this week, when he was reportedly, by an anonymous source, spotted in Spain. And then that newspaper from Alibaba reported that he was doing that study tour in Spain. So the stock as well this week, I think, was up on that news as well. I think was up 6% or something like that.
Yeah, that's the thing. Yeah, I find funny is how can we spotted Jack Ma, Alibaba's stock price goes up 6%. It's like, what? It's like, that seems a little bit bonkers in my mind. But yeah, it's interesting. Alibaba, I wanted to bring this up because Alibaba has actually bounced quite recently. So I think that Charlie Munger would be pretty happy. I think Monish Pabrai would be pretty happy. Baba, I'm trying to look. Alibaba's stock price, it got to a low of, $138. $138. And it looked like it was just, we remember talking about it, was just trending down. But it's actually bounced in the last little while. It is up 26% since the 4th of October. Which is pretty impressive. And there have been a few things, but I just wanted to bring this up because it's so interesting. When all the news was going against Alibaba, it's really just like news, bad news, stock price goes down. And now recently there's been like a couple of positive news stories and the stock price goes up. It's like, it just blows my mind. It's like, if you just look at the company's operations and their performance, it's just like, oh, yeah, they're doing well. Yep, they're growing. Yep, they're growing. Like, you look over the past couple of years. Yep, still growing, growing well, and still growing. It's like just a constant trend. But it's just like what you see in the media is like, oh, blocked IPO of Ant Financial. Oh, antitrust fine. Oh, Jack Ma's missing. And it's just all these news stories. It's like, potential delisting. And it's just stock down. And now recently we've had stories like, the one you just said, Jack Ma's back. There's been Biden and Xi Jinping are supposed to be holding a chat at the end of the year, which seemed to be a positive. On Tuesday, Alibaba launched a new chip designed for their servers to help their cloud computing capabilities. So that's another positive. I just think, isn't it funny? Just the media has such an impact on which way these stock prices go. All the news is negative, stock price down, and then all the articles suddenly, the negativity seems to have died down and there's a couple of positive things. Now the stock's up like 26% or something crazy. I just find it ridiculous.
Yeah, it is ridiculous how much short-term news that is often, speculative about what's happening in the future has more of an impact on the business than the fundamentals. It's insane that, news stories about a potential regulation or a potential tax or a potential deal or a potential new product. Like, these are the things that move the stock so much when this is a huge company, which is mostly the underlying company is mostly affected by its existing operations that are expanding over time, rather than these little things that are in the news all the time. So it is ridiculous how much a stock can just gain momentum. And then, the news, obviously there's events that happen and then the news reports on it, but then the news kind of gets momentum. It kind of snowballs on itself, because if some news is getting a lot of clicks, then more people are going to report on that, and people are going to report more negative things in that direction or more positive things in the positive direction, because they need better headlines and better articles and that sort of thing. So it's this whole weird thing where it's just this whole environment, this whole ecosystem of emotional humans trying to make money. That's really what it is. Whether it's in the news or investors, it's just emotional humans riding emotional waves in the short term. And it is crazy. The stock's up a lot. They can't believe I hadn't really looked at it recently, from 138 to 177. So that's not a small move.
It's big.
So we'll see where it goes. It didn't get to my. I think I told you off. I can't remember if I was speaking to you or someone else, but I said if it went to $100, I would put 1% of my portfolio in it as a speculative.
Yeah, that's right.
As a speculative investment.
I think you said that to me.
I think I said it to you off air or something. But
off air, yeah.
So it didn't get there, but I'm surprised at it. And maybe it will, but I'm surprised at how close it actually got. Because when I said that, I think it was at 180 or something. So I was very much joking.
I'm looking at the 1 year chart. 1 year ago today, stock was $307. Pretty insane. But yeah, anyway, very interesting story. Alibaba is a very interesting company. I mean, it's just interesting because you look at the stock and you're like, no doubt it's cheap. Like, you can look at it, it's cheap for what the business is actually doing, but it's just the stock has been pushed down so much just by fear of what happens next. There are a couple of question marks. So that it's not like there's no risk when it comes to investing in a company like Alibaba, but yeah, it's interesting. All right, talk to me about Facebook. I've not heard about this news story, and I'm reading your headline, which is Facebook rebranding, and I'm like, what?
Yeah, this kind of flew under the radar. I saw this earlier in the week, but I didn't really see too much about it, and maybe that was just because I wasn't looking into it. But so Facebook's founder and chief executive Mark Zuckerberg is preparing to talk about the name change, at a company event next week. So Facebook might be rebranding to a new name, which I mean kind of makes a lot of sense in a way, because I mean Facebook is of course what the company started as, but it's now really it's kind of the parent company of a lot of different social media businesses and other businesses that are going to be coming in the future. So under the plans, Facebook would be changing the name of its holding company, but not of the social media platform. So
I see.
Facebook, the social media platform will still be Facebook, but the kind of parent company, the holding company will change and, may change. It's not kind of set in stone yet, but they're going to be discussing it. And the rebranding move, of course, would not be a first. In 2015, Google rebranded itself as Alphabet. And they did it for a similar reason as Facebook is likely to do it. So Google, of course, had their Google business, their main advertising business, and they wanted to expand into other areas of technology, things like Waymo, autonomous driving, and a bunch of other things. So they rebranded the holding company or the parent company as Alphabet. And then they have their Google business, and then they have their other bets business. So Facebook would likely have kind of a similar structure. They would have their holding company, whatever the name is, and then they could have their other businesses within that, whether they segment them into Facebook, Instagram, WhatsApp, or whether they segment them into like social media or advertising, and then kind of their other categories. So. Yeah.
Interesting.
Yeah.
It makes... Sorry, you're going to say?
Go ahead.
I was just going to say, to me, honestly, at first I was like, wow, why would you rebrand? But it does actually make sense, because the way I think about it is how much information gets lost in translation when it comes to Facebook, when they're saying, Facebook, and they're referring to the company Facebook.
Yeah.
And then as opposed to when they say Facebook, and they're actually referring to the app Facebook.
Yeah.
So I think this makes sense because, yeah, you're right. If Google was just called Google instead of Alphabet, then they'd be saying Google this, Google that, and you'd think they were talking about their Google business, but in fact they have other businesses. So yeah, it does make sense actually.
Yeah.
And I have found that I have tripped over as well in the past when looking at Facebook and reading a statistic when I think they're referring to Facebook the app, but they're actually referring to Facebook the business. And I guess that's why they've recently been saying, Facebook family of apps kind of thing, instead of just saying Facebook app,
Yeah, exactly exactly right. So The Verge reported that the name change is coming as the company switches its focus from their main social media platform to building a metaverse, which is an online virtual space. So this is, of course, this new VR, AR kind of space that Facebook is focused on building and will, well, hopefully over the very long term become the main focus of their business. So that's kind of the reasoning as to why this name change may come. Although it is highly speculated that the change is also related to the recent whistleblower scandal, which has hurt their current branding. Of course, we spoke about this either last week or a couple of weeks ago. There was a whistleblower, an employee of an ex-employee of Facebook who was testifying at Congress about a number of things inside the business where Facebook was prioritizing profit over the safety of its users. I think it's easily the biggest damage to the Facebook brand ever, probably, or at least in the last couple of years. So, maybe that in combination with the changing business focus is why they're choosing now to kind of rebrand the business. But the big question is, what's the name going to be? And of course.
What do they change the name to?
Yeah, well,
I reckon my bet's on The Matrix, because it sounds like Zuckerberg's plans for the next 10 years sound like The Matrix.
Yeah, exactly. That would be a really good name if they just bought the rights to the Matrix franchise and then just name it The Matrix. That would be a great name. I would back that 100%. No, but of course, Twitter went crazy on this news with suggestions for Zuckerberg about what the name change could be. Very helpful suggestions, of course.
Oh, right.
You know how Twitter steps up in times of desperate need and helps out. So we've got some suggestions here that I saw on Twitter. We had a book face. So that, that's a rebranding. People wouldn't associate that with Facebook anymore.
No, it's totally different.
Book face. This one might be, well, it's one of my favorites. Zuckerverse. So metaverse and Zuckerberg combined. Zuckerverse. Yeah. I think that's a pretty good one. Although I'm not sure if that actually helps their reputation, putting Zuck in the, the title. A couple others. Face plant.
Faceplant. Well,
time suck.
Time suck.
Teenage Wasteland, Boomerville. That's a good one. And
Boomerville.
Boomerville. I didn't realize there was 3 billion boomers in the world, but there you go.
Absolute boomers.
And I think my favorite was a suggestion that they change their name to MySpace.
Bebo. Oh, that would be so good. Oh, we've come full circle. Imagine if Facebook donned the name MySpace.
Just
that would be fantastic.
Yeah, that would be great. It'd bring back MySpace, resurrect it.
I mean, honestly, it kind of makes sense. MySpace,
yeah,
because they kind of they're talking about this whole metaverse, VR, AR thing. Who knows? Jeez, wouldn't that? Honestly, I think they should just do that.
If they change it to MySpace, I'm selling the stock. I'll tell you that right now.
Yeah, you're getting rid of it. Fair enough. Fair enough. I think MySpace, doesn't it still exist?
I don't know. Does it? Surely
MySpace.
Not. No way it still exists.
There you go. What? Yeah, it still exists. It's just not got a lot of users, clearly. Discover music, videos, people. Man, there can't be many people on here.
Maybe we should bring it back.
Geez.
Imagine if that just blew up on TikTok. Everyone was just like, let's just get back on MySpace. Just for
that would be hilarious. Nah, there's no way. This looks like garbage.
Yeah, it's terrible. It's horrible. Yeah, people think Facebook's bad. It's MySpace is on another level. No, but I mean, I was going to try and brainstorm some ideas, but I really couldn't beat anything that Twitter had. So I have no idea what.
MySpace is great. I like Teenage Wasteland too. It's pretty funny. All right, well there we go. I guess we'll just have to wait and see what Facebook if they choose to rebrand. Sounds like they probably will. I don't know.
Yeah, I would imagine they will. Yeah.
Yeah. All right, should we talk? What should we do from here? Should we try and get through these other news stories, or should we try and focus on Q&A?
I'm easy. What do you want to do?
All right, let's try and fly through some of these, because otherwise it'll be old news. So we'll get through this story about PayPal, which is quite interesting.
Oh yeah.
PayPal and Pinterest. So it says here, PayPal Holdings is in talks to buy social media platform Pinterest, according to people familiar with the matter. A move that could enable the payments giant to play a bigger role in a customer's shopping experience.
Dude,
talks around.
Sorry, before you go on, I have to say I love it when a journalist say, according to people familiar with the matter. Like, what does that even mean?
Allegedly.
Is it an anonymous source? It's not even anonymous source. Like, you're not even claiming you have a source. It's just like, well, I've spoken, I've put some feelers out into the... But yes, just anyway, sorry, I just had to say, that's a common thing that journalists say when it's kind of like an anonymous source or something. And it just makes me laugh.
Yeah. Allegedly, the talks are at an early stage, and allegedly, it may not lead to a deal, and allegedly, some of the people cautioned that. No, I'm just kidding. Talks are at an early stage, may not lead to a deal. Some of the people cautioned, if there is one, it would be big, as Pinterest has a market value of about $40 billion. Pinterest is an online sharing platform on which users share photos and links to recipes and home decor ideas. It makes money from advertisements at the moment that appear on the platform, but e-commerce is in its sights too. In April, Pinterest expanded a partnership it struck in 2020 with Shopify to reach customers in 27 more countries, up from just the US and Canada previously. So I find this interesting, actually, because clearly PayPal, they just want to continue to put their foot down and become a bigger name in e-commerce, bigger than they are already. The article does note that PayPal rode a wave of digital payment adoption over the course of the coronavirus pandemic to post record numbers of users and transaction volumes. So I think they just want to kind of maximize that trend, like keep a good thing going. But I feel like this is interesting because I'm not a Pinterest user, but as I understand, they currently have no inbuilt e-commerce functionality. Like, all the posts, they link to external pages for, sales, for example. So, I feel like just off the top of my head, I'm thinking, Pinterest is already working with Shopify to try and create a more seamless, in-app shopping experience. And then you add PayPal to that mix. And I feel like, Pinterest plus Shopify plus PayPal, I feel like you've got kind of the fundamentals to actually build an e-commerce, to start to shape Pinterest into more of an e-commerce site. But to be honest, I don't even know how many users like Pinterest has. Maybe it's more popular in other demographics, and I've just missed the boat because. I was surprised when I heard that Pinterest has a $40 billion valuation. Yeah,
I can't say I've ever used Pinterest, I don't think, except accidentally. When you Google it, when you're looking at an image or something on Google and it goes to Pinterest. I think that's the only way I've ever gone onto Pinterest. I would imagine it probably leans more female, but I mean, I don't know. I haven't looked at any of the numbers, but it makes a lot of sense that they would want to build kind of in-app or in-website e-commerce. I mean, that's what Instagram is working on at the moment, and Facebook, and it's one of the bottlenecks, I think, in online shopping, is that a lot of the time you're in maybe Instagram, or maybe you're on Pinterest, I guess, or you're on Facebook, and you see an advertisement to a product and you're in a particular experience. Like, you're in Instagram, right? And you're used to swipe. The UI looks a certain way. And then you click the link and it's just this, it takes longer to get to the website than it does to swipe to the next story, right? It's not a seamless experience. The website looks different to the app. And it's a bottleneck in the process of getting someone to convert someone to make a sale. I can't speak to Pinterest, but that's exactly what Instagram is working on. Now you can look at items from advertisements or from Instagram pages in Instagram, so you can kind of build a bit of a shop, but you still have to go externally to make the payment. And that's kind of, Facebook is kind of working step by step to put more of that process right in Instagram. So that's a seamless experience. So it makes a lot of sense. to me.
Yeah, I feel like Instagram is the perfect app to do that sort of shopping
for fashion
stuff.
Particularly for fashion.
True.
So
many, fashion, like beauty products. I'm feeling, really a lot of different. I feel like it lends itself to, but interesting. So sorry, not too much to add. Again, just speculation and rumors at the moment, but it could turn into something interesting in the future. We'll just have to kind of see if it actually plays out.
Yep. We'll hear in the future from those people familiar with the matter when they
exactly. Allegedly, we will hear from them.
Allegedly.
Yeah.
We just start every story with allegedly. Allegedly, Facebook rebranding. Allegedly, Alibaba stock.
Allegedly, Netflix
back.
Releases Q3 earnings.
We don't know for sure.
All right. What should we do? Do you want to just quickly fly through this Evergrande update?
We should. Yeah, there's really not too much to kind of say on this, but of course, Evergrande is the Chinese property developer that's on the brink of collapse, and they've been hit with yet another road bump, unfortunately. So the company, of course, has over $300 billion in debt, and they're desperately trying to find capital to meet the huge number of interest payments that are coming its way. So they're just scrambling at the moment to get any kind of money. And one of the ways they do that, of course, is to sell parts of their business, get some capital, use that money to survive another day. And earlier in the month, they actually entered into talks with a smaller property developer called Hobson Development. And the deal was to sell 50.1% of Evergrande's property services business for $2.6 billion. So just selling control of it, but not the whole thing. And that would, of course, be a tiny dent. $2.6 billion is a tiny dent in the $300 billion pile of debt that they have, but it would allow them to stay solvent, stay alive for a little bit longer so that they can find some more money, I guess.
Yeah. I guess just pay those bonds that they've been missing.
Yeah, it's an uphill battle. I mean,
they're cooked.
I'm trying to be positive here. Done. It's going to be tough for them. And Brandon's just like, they're
tough. Well, I mean, I don't know. I'm obviously no expert in Chinese property developers, but you just look at the numbers involved and you're like, holy smokes.
Yeah.
It's just going to be so hard for them to stay afloat. But, stranger things have happened. Maybe they do. But yeah, this is definitely a big blow. And that's what everyone's been saying, like, Evergrande, they've just got to try and whatever they own, sell it. Try and sell it because, to stay solvent, we need, like, if they don't get their hands on money, they can't take on debt. So if they can't get their hands on money in other means, then they're gone. There's already a ticking time bomb that they're set to default on these bonds that are that they've already missed their payment on. They've got this 30-day kind of window, which is probably getting close to being done, which could be scary. But yeah, they've just got to try and get their hands on money any which way they can. And it's like a deal like this where they could have raised $2.6 billion would have been very helpful for them. But
it fell through.
Yeah.
That's
doesn't look like it's happening.
No, they couldn't agree on a deal. And I mean, I think Hobson Development probably held all the cards in this deal. So
absolutely.
That's probably why it ended up falling through. They were probably being a little bit they were kind of probably pushing their weight around, I bet, on the deal.
You can imagine so. Yeah.
So yeah, that's they needed that small amount of money to keep them afloat, but they couldn't get it. So I think you're right. I think we must be at least halfway through, maybe three quarters. We're close, are we? Was it in the?
I think
was
so.
it in the September, late September? I think it was
like
right?
the 23rd of September.
Right. Okay.
That could be very close. I don't know. I have to, because maybe they've negotiated something and I've missed it. So I might have to do a little bit more digging to actually figure out where they are with those interest payments.
Yeah.
I'm not sure.
Yeah, well, I'm sure if there is a big story to talk about next week, I'm sure we'll be talking about it.
I'm sure we'll see it in the media. Yeah, I'm sure
exactly
we'll see it.
Right. All right. Well, I think that's all we had for news this week. We'll jump into some Q&A. We've got a few minutes left here, so we'll we'll maybe answer one or two Q&A questions and get through this huge pile of questions. But thanks everyone for who has been submitting questions, and we're doing our best to get through as many as possible. But of course, if you have more questions, feel free to head over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast and just leave your questions as a comment on the latest episode. Where do you want? Should we just start with this first one here?
Let's go for it.
So here's a question. Which metrics do you look into when comparing and researching companies? Maybe a top 10 metrics. The longer the bull market runs, the more skills you need to make money now.
Yeah, I don't know if I could just rattle off. I mean, well, some of the most important metrics that I like to look, I don't look at like price of sales or price to earnings and that sort of stuff. When I'm looking into a company, I'm looking at consistent growth over a long period of time in major numbers like revenue, earnings per share, equity, free cash flow. I think that investors should focus a lot on free cash flow. At the end of the day, free cash flow is the money that is for the owners of the business. Like after everything's been taken into, what is the free cash flow or the owner's earnings, I suppose. Obviously, debt metrics like current ratio, having a good current ratio where they've got, heaps in current assets versus current liabilities, and the debt to equity ratio. Obviously, you like to see a lot more equity than debt, but also return on invested capital is a big one, really big one. Return on invested capital is probably one of the most important things that you could look at, I would say, in a company. Like how well is, because I mean, companies just get their hands on money and then they try and turn it into more money. Yeah. And that's like return on invested capital is just like how effectively is the management team using the capital at their disposal to turn a profit. So obviously that is quite an important metric as well. But there are plenty. I think they'd just be some of the ones off the top of my head. Can you add to that?
Yeah, I mean, everything that Brandon just said, and then maybe to think of it from a different angle as well, it's important to look at what I would call key business indicators that are related to that particular business or industry. So when we're talking about Netflix, for example, everything that Brandon said in terms of revenue, profits, those things are important, but then also zooming in on revenue and thinking about, well, what are the levers that they have at their disposal to drive revenue? And in Netflix's case, that's going to be how many subscribers they can build around the world, and then also the price that they're charging for those subscriptions. So you can kind of zoom into the business or the industry specifically and think about what are the main factors there. So that would be kind of my addition to everything that Brandon just said. Yeah.
Awesome. All right. Should we do one more?
Yeah, we'll do one more. If we've got a short one, maybe let's have a look.
Okay. Here's one that you'll probably be able to answer pretty quickly.
Okay.
Hi guys, I'm a long time listener, but first time posting because I normally just listen to the podcast. I heard you wanted people to ask a question. Yeah, this was from a few weeks ago now. Here's a serious one. How much do you believe in chart reading when it comes to investing?
Yeah, not at all. I think, in my opinion, I find it very difficult to know what's going to happen to a stock price in the short term. And this is coming from kind of Warren Buffett's principles, but now being in the markets for a number of years now, I see it almost, every month or every day really with businesses that I'm either invested in or looking at. Stock charts can do weird things over a year, over 18 months, over 6 months, over a week. And some people use technical analysis and can, well, they say that they can kind of look at patterns and predict what's going to happen in the short term. Personally, I think that a lot of it is just very much driven by emotional investors reacting to short-term news or investing over a short period of time. And the truth is, if you're a long-term investor, what happens to a stock chart in the short term really doesn't matter. Maybe some people will make the argument that you could use technical analysis or chart reading in combination with fundamental analysis to get a little bit more out of your investment. But if you're holding a business over 10 years and it's a good business, what's going to drive the vast majority of your return is the success of the underlying business. So that's where I spend my entire time trying to understand. And maybe there could have been a bit more I could have squeezed out of it if I recognized some patterns and avoided investing, invested a week later or a week earlier or something like that.
Yeah, but it's a week.
But it's not going to make a substantial difference in your return over time. What will is the fundamentals of the business. So that's where I focus.
Yep. No, I'm with you. Technical analysis, the chart reading, that's very much in the realm of stock trading, which, people can try. Most people don't do very well at it. Most people lose money doing it. But people still like the idea of trying to make money in a short period of time. But yeah, in all honesty, when we're talking about investing, it's just find great businesses, that are going to be worth more in 10 years than, or are going to grow over the next 10 years. And then just make sure you're buying them at a steep discount to intrinsic value. The only chart reading is when I look at the share price chart and I go, yep, you know what? The shares are currently trading below intrinsic value, or when I look at it and I go, you know what, the shares are not trading above intrinsic value. And that's about the extent of my chart analysis. I used to because we got our kind of entry with Phil Town's books, and he talks about the 3 tools or indicators or whatever. To be honest, I don't even think that he would use them anymore. So there was a bit of that, looking at stochastics and MACDs and whatever at the start. But I mean, really, you just want to take an ultra long-term approach. And if you've got the opportunity to buy a great business at a good price, then take it. If you don't have that opportunity, then don't do it. That's about it.
Yeah. All right. I think that's a good place to end today's podcast, this week's podcast. Thanks everyone for tuning in.
Nice.
As always, as I mentioned, if you have more questions, feel free to head over to the YouTube version of the podcast. Thanks to ShareSite for sponsoring this episode. Again, head over to sharesite.com/young investors. Try a plan for as long as you want for free. Or you can also sign up to a paid plan and get 4 months off a yearly subscription. Sharesite.com/young investors if you're interested in that. Thanks everyone for tuning in. Thanks Brandon for joining me as always.
All good, friend.
And we will be back next week for episode 152. 152.
Hooray! See you then.
See ya.